This is Wallet Brief, where we break down what actually moved the US economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week, and what it means for your wallet. Right now, one of the more unusual terms trending in finance conversations is Yutz. It's not a formal economic indicator, and you won't find it in official reports, but it's gaining traction online as a way to describe confusing or irrational market behavior. The recent market environment has been unpredictable. Stocks are reacting sharply to mixed signals, strong job data on one hand, lingering inflation concerns on the other. In this kind of environment, investors sometimes use informal language like Yutz to describe moves that don't seem to follow logic or fundamentals. In other words, it reflects a growing sense that markets aren't behaving the way people expect. Now, the real trend behind this isn't the word itself, it's what it represents. We're seeing a phase where sentiment is fragile. Investors are reacting quickly to headlines, even small ones. That creates short-term swings that feel disconnected from long-term economic data. It's not necessarily a sign of collapse, but it is a sign of uncertainty. And uncertainty often leads to volatility. When markets behave unpredictably, it can affect retirement accounts, investment portfolios, and even consumer confidence. If you're invested in stocks, you might notice more day-to-day fluctuations. That doesn't always require action, but it does mean risk levels are higher in the short term. It can also influence spending behavior. When people feel unsure about the market, they tend to spend less and save more. That shift can slow down parts of the economy, even if underlying data remains stable. For everyday households, the key impact is psychological as much as financial. When markets feel unpredictable, people hesitate, whether it's investing, buying a home, or making large purchases. Keep an eye on major economic data releases, especially inflation reports, Federal Reserve signals, and job market updates. If those start aligning more clearly, market behavior may stabilize. But if mixed signals continue, this kind of Yutz sentiment could stick around longer. For now, the takeaway is simple. The market isn't just reacting to data, it's reacting to uncertainty about that data. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with